Hello, everyone, and welcome back to Markets in 2 Minutes. This is Connor Darrell from the WealthSpire investment team. So equity markets have performed quite well year to date, but there are some interesting dynamics going on under the hood with respect to what's actually been fueling the rally. One of the unique features of this market is that it has been extremely narrow. And what I mean by that is that returns in the S&P 500 have been carried by only a few stocks. This data here is through the end of May and shows the top 10 contributors to S&P 500 returns on a year-to-date basis. And bear in mind that as of the end of May, the S&P 500 was up 9.6%. So cumulatively, these 10 stocks produced 10.6% of return, which means the remaining 490 stocks in the index were collectively negative, which is pretty staggering. And one thing that stands out when you look at this list is that all of these companies are either explicitly technology companies or operate in a tech-adjacent AI-oriented business. So you've got most of the FANGs here. You've got Tesla, Broadcom, which is a semiconductor company, you've got NVIDIA, and you've got Salesforce. So really what's been going on is that there's been an immense amount of interest and speculation in the market around the growth of artificial intelligence and the opportunity set that it may be opening up for different businesses. And that's something we've seen anecdotally as well, just talking with clients and people within the industry. There's just been a lot of buzz around the AI craze. And so there's been a ton of money that has flowed into these stocks to reflect all of that interest. And that's what we're showing here on the next slide. This chart shows monthly flows into tech stocks going back several years. And May was the second strongest month since 2015, and by a pretty wide margin as well. And this is starting to reflect what we might refer to as a FOMO trade, where money that's been on the sidelines throughout the rally finally starts to dive in as investors start to feel like they are missing out on a big opportunity. Eventually, as this FOMO trade takes hold, you start to run out of investors who are on the sidelines, and that natural fuel for the rally starts to run low. So we would caution against chasing things from here. With all of that in mind, we aren't necessarily calling for any kind of aggressive reversal, although that is always a possibility with equity markets. But generally speaking, what equity investors would like to see happen is for market participation to broaden out from here and for the rest of the market to kind of take the torch and carry us forward in order to elongate the rally. Because it's unlikely that this type of tech leadership and narrow market can persist forever. Our messaging here is to remain patient and try to fight that urge to chase the high-flying names, many of which are very large and significant companies, which the vast majority of investors already have a healthy exposure to within their portfolios anyway. And we'll leave all of you with that note and wrap up this edition of Markets in 2 Minutes. See you all soon.